Hey traders, this is Ron Haidt at Market Tamer. Happy Thursday. Hope you had a great day. As always, nothing in this presentation shall constitute a recommendation to buy or sell any security. Trading stocks and options involves risk, and specific financial issues should always be addressed by your financial advisor. Kick off here with the Qs down 1.24%. Volume picked up again, but this time we have more of a doji. We finished off those lows. We did finish below the 200-day SMA. This is bearish overall for the market. I mean, the major support is somewhere down here near 155. I'm not saying it's going to drop another $14, not at all. But right now, that's the next major support. With tomorrow being a Friday and we've already had carnage this week, we could easily just end up maybe selling off in the morning and then having short covering or a rally into the end of the day because the bears have been taking it in the shorts for a very long time. So the fact that they're actually making some progress right now, they might just want to take what they can get to the door and see what next week brings. If we take a look at the SPY, which I have a bullish position in, SPY was down 2.2%, also cracked the 200-day moving average. It hasn't reached that other swing low from around 268 or so up into 270 area. We're getting close. Intraday, it got down to 270. Then the next major support's down here. Again, not saying it's going to get there, but right now the bears have the edge, and the same goes for the S&P, just like I said on the Qs. The broad market tomorrow, I could easily see a sell-off in the morning, and then a rally into the close or something coming off the lows, whatever the lows are going to be, just to sort of go flat into the weekend, again, waiting until Monday. But right now, definitely bearish, but we're also oversold. Yesterday, we were oversold. Now we have another full candle outside that lower Bollinger Band. So let's take a look at the DIA. Try that again, DIA. The Dow, same thing. Another day outside the lower Bollinger Band, pick up in volume. It tagged the 200-day moving average. If the 200-day falls, then you can go maybe to this swing low or then back down here towards 235 if we get that far. We take a look at the IWM, down 1.9%. Second day below its 200-day moving average in purple. Again, completely outside the Bollinger Band. Going into a Friday, I just see the odds of a rally increasing at some point tomorrow. Doesn't mean we can't drop another 2, 3, 4, 5% intraday or something, but I would be really surprised if we actually see a sell-off into the close. Volume picked up again. Support is still where it was at from yesterday. Here is MDY down 2%. It's almost at that first little support area and then more down towards 330. So right now the MDY is really rolling over hard. If we take a look at some individual ETFs, check out the XHB. This ETF, the home builder, has been down 2, 4, 6, 8, 10, 12, 13, 14, 15, 16 out of 17 days. That's having a bad stretch, Support, though, I'd have to go back multi-years. If I go back 2 years, where's the next support level? Probably around 33-ish, 33.5. Still another $1.50 lower, 3% lower before that support comes into play. We take a look at XLF. Now, they had a bad day, down nearly 3%, but if I go back to a one-year view, you're coming right into that low, right around 26. If 26 falls, then we're basically at 25.5. We take a look at the transports. They were down 1.46%. They're starting to get close to that one. There's a little bit of support at 185, but then there's better support down towards 180. The semis, SMH, they rallied off their lows. They were only down 0.88%, but also came well off their highs. They were really trying to rally today. They are clinging to support at 95 bucks. If 95 falls on a closing basis, it could open up another avalanche of selling. Now, there was one bright spot today in particular. That was Delta Airlines. The stock was actually up over 3.5%. We gapped up and then finished right where we gapped up at. So we had a doji. We tried to get as high. What was the high? 52.60. The low was 50.67. So again, finished right where we opened, but it was a gap up. Now, typically the airlines, and if I bring this in, here you go, and we look at Delta at financial, there's still a little bit of dip historically. Over the next 2 weeks, you can see on the screen, the probability is 45% that it drops another 0.57%. So there's actually 55% of the time it goes up, but it's never by much. So still a little negative bias, and then towards the end of October, another week and a half, then we start getting that positive bias in November, pullback, and then a recharge. So we've talked about Delta before. This stock between now and the end of the year historically has gone up 90% of the time by about 16%. Well, now we have our earnings report. So I want to keep an eye on this. That's a positive development, and we're getting real close to that seasonal bullish period. How about some other stocks? ETFs, gold. Gold broke out today, but there is a big old but. It broke out. We cleared some highs. The next major technical resistance, frankly, is the 200-day. That's about 6 points higher, 5 points higher. Not a bad potential reward to risk here. I could use something maybe like a 20-day EMA as a trailing stop in theory. But if I take you to financial, be very aware of what time of year it is. If I show you 13 weeks on GLD, 46% of the time it actually goes up, similar to Delta. But this time by it's a whopping 0.4%. It's very, very, very choppy. But then watch what happens when I take this slider and take it out a little further. If we go out 20 weeks, you can start seeing when January comes around, the stock gets shot out of a cannon. Typically, that's a really bullish period for gold. So if I had to compare the periods, and let's say I wanted to buy 1,000 shares of GLD in a paper trading account, this is when I'd want to make a 1,000 share play if that was my full size position. Now on a breakout, I would consider a third or a half size because I don't have the wind at my back. I'm not swimming with the current. This is swimming with the current. This is having the wind at your back. Right now, historically, it's choppy. So the fact that GLD is actually breaking out, hey, technically that's great, but it's not the time of year it typically has the wind behind it. The big money quote is not behind it. The big money typically comes in January, and you can see that year over year by looking at the volume. And I constantly use this example at financial to show you guys the power of seasonality. So again, it is breaking out. Maybe a 20-day EMA as a trailing stop. Practice it in a paper trading account. It's free. There's no real money at risk. And then if it ends up rolling over, it wouldn't be a surprise because this isn't typically when it runs. And if it does run, I'm only going to be willing to commit a smaller size position. Okay, so I hope I made that clear, and it's a good example of when the timing needs to be right, in my opinion. You take a look at silver, SLV. It did not do well today. It was only up 1.64%. We did not break out to new highs. Typically, when silver lags this bad, it also is sort of saying, yes, gold might be running, but it doesn't have its friend along for the ride. So it's sort of like a contradiction or a divergence. So be careful here. Silver did not break out. But look at the silver miners. They didn't even close above the 50-day today, so they have not broken out. Now the gold miners, because gold was up so much, has. GDX's target, basically 200-day, about 21.5. That's only another 1.75 again. I mean, from a percentage standpoint, it's a nice little move, but it's not a whopper move. And GDXJ, which are the juniors, they were up 6.46%. Their target's going to be up there near 31.5, 32. They might have another 7-8% to go. Then their resistance levels will be hit too. All right, folks, wish you guys a fantastic Friday and a great weekend ahead. I'll be back with you in the Sunday video. Let's see how this plays out. I wouldn't be surprised to see a gap down at the open, or maybe some overnight selling, and then some sort of short covering by days in. Let's see what happens. Take good care, and we'll see you in the video on the weekend. Bye-bye.